Hello, good afternoon, and welcome to this introduction to Eos Loan. Such a pleasure to be here. My name is Luis. I'm with the sales and business development team here at Eos, and it's really such a pleasure to have you here to introduce you to Eos Loan, our value proposition, and what we are here to help you with. In fact, I believe I can start by introducing you to the company, our purpose, and our business model, see if it fits with what you're looking for. I know I've been sending a lot of messages there to you, and maybe you've heard, you've gotten to know a little bit about our products, and you're interested in finding more financing options. Most likely, you are a solar contractor or a home improvement contractor looking for more financing options. And the big pain point for you today is all those credit turn downs and hard time finding the right fit for your customers. Most times you see high interest rates associated with high dealer fees and everything that comes with financing today. In fact, we're going through a time in the solar history, in the solar sector, that is very different than what people that have been in the solar sector for many years now are used to, which is this high interest rate, high financing cost environment. And EOS Loan is here to help solve or help introduce some solutions to that type of problem. Now, we position ourselves with a purpose, more than a solution, more than different solutions here. We position ourselves with a purpose. We are here to stay for the long run, and we believe things are going to change throughout time. Now, one thing that will not change is our willingness and our energy to make homeowners' lives better by making their choices more sustainable and affordable. That is our big why. And we believe we can do this by, of course, working with contractors and manufacturers such as yourselves, and helping introduce sustainable solutions for your customers. And I believe you are in the sustainability business, in the solar business, to help push for this big renewable and solar wave, of course, not only having a positive impact in the environment, but also driving millions of dollars in savings for your customers. But also, we are here to help make financing costs more affordable. As I said in the beginning, this is something that drives us. And we believe with our multi-funding approach, we believe with our current business model, we can help solve for that. In fact, we are a credit marketplace. In other words, what we do is we pull different capital partners, the ones that are already playing a role in solar or home improvement, and the ones that are not playing a role in solar or home improvement. Those two types of capital providers profiles here are the ones that we welcome into our platform. Now, we do this in different ways. We welcome capital partners that already have existing offers and solutions to the solar and home improvement sector by introducing their offers into our platform and distributing that, getting that to you, contractor, as one more of the options that you have. Now, we also chase after the 97% of the capital partners out there that are not playing a role in either solar or home improvement. And those ones have so much to offer because they're not playing their role yet. And sometimes they are interested, not the 97% one that are not out there yet, but at least a small percentage of them that can come in and play a role and help expand the number of financing options out there. So by welcoming these different capital partners with either existing financing options or new financing options and helping them develop these new financing options based on your vision, on your needs, on your knowledge and everything that you share with us, we bring that back to these partners and design these winning products and solutions. So that is the essence of being a marketplace here. And I'll just read this sentence because I believe it's really well put. We connect solar and home improvement contractors with a diverse network of lenders, capital partners, providing unparalleled access to funding opportunities to homeowners and business owners. So I gave you another cue here. We are working on financing options for both homeowners and commercial owners as well. So business owners out there, we do have some commercial lines here to offer. So these are, in essence, our visions, our missions, and everything that we have here to put forth. Now I'll try to advance the presentation here by bringing a very practical approach and giving you, in fact, those options to help you boost your sales. At the end of the day, for you, it's of course it's about that big purpose. I know you want to have an impact. I know you want to have a business that changes people's lives, that drives savings, that help people keep that money in their pocket. But also, you need to make your own money. You need to boost your sales as a contractor, as a manufacturer. You are looking for those different solutions, those different financing options in order to expand, in order to grow, in order to make more sales on your own front there, on your own business. So I believe that's one of the big reasons why you're here too. So by giving you this range of options here and giving you an introduction to each and every financing product category that we have, you will exit this broadcast here. You will exit this video with more options, I'm sure. And then you will have to make a decision to onboard our platform. If you're not onboarded yet, we have an excellent platform here that you will be able to then create these application records and access all these financing options in. So I'll go ahead and give you a quick snapshot. And again, touch on the fact that we are a credit marketplace. And this is really the spot where we see ourselves here in between capital partners and manufacturers and contractors, probably such as yourselves. Eos Loan is right there in between. And like I said, we're welcoming existing capital partners that have existing offers into the spaces that we're exploring alongside yourselves here, solar and home improvement, and we're welcoming new capital partners. There is a number that we base our business model assumption out of, which is the fact that the United States have more than 4,000 different financing institutions, banks, credit unions, and all types of different fintechs, companies with embedded technology, and the more traditional ones too. Now, as I said, just to give you a clear vision of what this represents, in fact, only 3% of those more than 4,000 companies, financing companies, play any role at all in our space here, solar and home improvement. So there are a lot of folks out there. There are a lot of companies out there under the capital partner space that could come in. And in fact, if we could double that up between 3 to 6% now, all of a sudden we'll have double the amount of options here. So, and we'll still have 94% of all capital partners not playing a role in either solar or home improvement. So the amount of possibilities here is immense. And you'll see as a solar or home improvement contractor within our platform, within our business, that we will be introducing many different options. As you onboard, we'll have existing options, but then every other than, and we hope to keep this, but on a monthly basis and even weekly basis, we'll be introducing different financing options for you. I'll give you an introduction to the financing product categories that we have, but keep in mind that each of the financing categories that we have here offer multiple options within themselves. And I'll show you this right now. In fact, all these 5 different categories are the ones that we carry existing financing options in. So, for example, in the equity share program space, we have at least 2 partners right now, and we are looking for and always also welcoming new partners on the equity share space. In fact, equity share is one of those solutions that we help design alongside one of these capital partners, and we were one of the first, if not the first financing company that introduced the equity share program in Texas and Florida initially, and now we have many more states. But we were one of the first, if not the first, to introduce that financing option last year, and we're so successful in deploying that alongside contractors in those different regions. So exciting to be able to introduce that and have customers taking advantage of their equity, of their home equity, and being able to tap into those untapped resources. Some of those enjoyed a cost of financing that was so competitive, and still is for the ones that are considering it. So this is really the sense that we get out of that driven mission and that purpose and the impact that we can have here, of course, alongside yourself. as the main point of contact with these customers, right? The one that's bringing in these customers and our main partner here. Now, in the traditional loan space, we like the traditional loan space because of all the existing offers that are already out there. Of course, you know this, and you probably have partners that offer traditional loans for solar and home improvement. And this is really interesting because these products, they have been developed to attend to the needs of solar and home improvement projects, right? So they have terms, they have associated costs, interest rates that allow the customer to fit in that monthly payment below their savings threshold, right? So they don't have necessarily an impact on their monthly budget by going solar. In fact, what you're offering as a contractor is immediate savings so many times, right? With these traditional loans. Now, of course, with the current interest rate environment, these things are moving into leases and other options, third-party ownership types of offers. But we still believe that this interest rate scenario is only temporary. So we'll see traditional loans coming back in once these interest rates start dropping again. The big problem with traditional loans is the fact that so many of these loan providers, they had to increase their interest rates, and the way they could compensate for that and be able to give the customer a lower interest rate outlook for 20, 25, 30 years was by charging you, the contractor, that big dealer fee, which is just a way to anticipate revenue, right? And that way they could drive down interest rates and offer 3.99, 4.99 APRs on 25 to 30-year terms here. But those are not necessarily the true rates because they had such huge dealer fees associated with them. Now, the traditional loan that we carry is a 15-year term, at least the main one here right now. It's a 15-year term with a 6.5 APR. So very interesting product, and I'll introduce you to that in a minute here. I just want to cover the remaining three options. The commercial loan option, in fact, this is a product category in which we have at least three different providers here. And we structure these providers by having the ones that approve these financing options faster. We have one that have offer a longer term option, and then we have one that prioritizes cost over anything else. Starts with a 6.5 APR, but then it requires more information to get it approved. And it really depends on the priority of the customer. In fact, we can work with all three of them, and we like to work with all three of them for every option to give the customer the best one. Again, within each of these product categories, we have more than one partner, like I'm saying, and we will work with all of them. And in fact, sometimes we will even cross different financing categories here to give the customer the best option. Sometimes the customer will start considering an equity share program, and then we'll end up with a traditional loan one because they hadn't seen it or they hadn't considered it before. I understand we have to work very closely with the contractor to be able to pitch this in the correct manner, in the correct form to the customer. And that's what we're all about here. Close proximity with the contractor, with a sales rep, to be able to work through each and every deal, to develop that, to mature that. That's why we have, an excellent account management team to support you and give you that ability to go from one option to the other and have multiple options on the table for the customer to be able to get to the best one. And that's what we're all about here at Eos. And we believe by doing that, we'll be able to drive affordability and maximize cost and efficiency here in deployment. So with commercial loans, it's no different. That's exactly what we do. Now, the HELOC is another secured option here. And, these loans, they tend to differ themselves on a more basic level by being either secured or unsecured. So with the secured side of financing, we do have the HELOC, which is a more well-known type of product too. More like the traditional loans, but the customer will usually know what a HELOC is. Now, this HELOC that we have is through one partner that has designed this product to be very solar friendly with a term up to 30 years. And I'll go into more details in a second here. Last but not least is the personal loan providers that we have, and we can work with up to 16 different options through a partner's platform. And I like to say that this is sort of like this last resort option for the customer when they're not approved for anything. And this is very common for the customer to not get approved for anything. So the personal loan will be very customized to that current situation for that client, and it will range in terms and interest rates and costs in a way that it's unpredictable. Really, it's really going to be based on the customer's profile. Now, allow me to go into more details on each one of these product offering categories here to give you a general scope and certain general guidelines in terms here of what we can offer within each one of these financing categories. On the equity share program, as I said, this is a very friendly, very interesting option. And the most appealing factor here is the fact that you can pitch this to the customer by offering them a 10-year term with no payments required throughout the 10 years. In other words, the customer, if they're going solar, for example, they get to enjoy 100% of the savings they get. They don't have to make any payments back to the capital partner until their term is up, of course, and I'll explain in a second here what that means. But they get to keep all that cash inflow, and in fact, they also get to keep the tax benefit that they get up to 30% of the total system cost. So they get to pocket that up front and keep all that money for 10 years. Now, there's going to be a cost associated with it. And the way this is going to be structured is out of their equity in their home. And I'm sure you're familiar with it because so many contractors understand the concept of home equity. But for the customer to be eligible, minimum requirements are that they have to have the 30% equity available in their home, at least 30% or more. The FICO score requirement here is really significantly lower than average too, starting with a 580 FICO score, which can include a lot of folks out there that have a significant property but don't have the credit score. In fact, they can qualify if they have at least a 580, which is a really friendly threshold here for homeowners. Now, their home must also be worth at least $200,000. Cannot be a mobile or manufactured home. This customer cannot have any bankruptcies or in the last 12 months, and no more than one late mortgage payment in the last 12 months. And that is because, of course, this whole deal is going to be structured out of their equity available in their home. So let me explain how that works. I gave you the pitch here, the ideal way that you can introduce the idea to the customer, but the way this is going to be structured for the customer to be able to pay it back, pay it off at the end of 10 years or pay it down throughout the 10 years is, if they have a $500,000 home, let's say, and they need to get the funds for a $50,000 project here with you, project that you're selling, right? That is equivalent to about 10% of their equity. So we'll work with that initial amount, and this capital partner will lock that in, and it will increase their equity portion over time, over the 10 years. So they will have a cost associated with an increased amount of equity throughout the term, and also the way they're going to get their investment back and their revenue is that percentage of equity that's locked in is going to appreciate over time because that home is going to appreciate over time. So that initial percentage is going to be set 10 based on the home value, whatever the percentage is equivalent to the home value. And they're going to end up at the end of 10 years with a different amount because then that home is going to be worth a lot more, we hope, here for the customer and for the capital partner. So both parties here are benefiting from the appreciation factor of this home over time. And that is how this investor is making money. It's more like a real estate type of fund and availability of resources here than anything else. So they want to ride that 10-year term to make sure their investment is appreciating. So that's how the equity share program is worth. And they're going to increase some of that percentage that's locked in throughout the 10 years. They're going to end up with a little more than 10%. That's going to be based out of a multiplier that's going to be applied to that initial equity. Of course, as you get onboarded with EOS and we go into a personal and customized presentation for your sales team, We'll get into those details. But the equity share program is really, really interesting because it has that upfront appeal of offering all that cash flow for customers going solar. They will be able to utilize that, or not even utilize that. If they end up selling their home, just with the difference of the appreciation, they'll be able to pay it off or pay back um, throughout the term here. So the cost of financing here is really going to be determined by the appreciation of the home's value over time. There is a way you can calculate exactly how much that's going to be, or at least a ballpark of how much that's going to be. Through our platform, we do have a calculator for you to get into much more detail and be able to pitch that. And as you get into our platform, of course, like I said, we're going to give you a customized training session to go into those details. I want to cover some of the availability here in terms of states. You see here on the left side the states in blue and the states in yellow. Now, the states in blue is where we have full availability for this product. And, in fact, it's applicable to primary residencies, secondary homes, and investment properties. And in the states in blue, you'll be able to offer this to all these different homeowners. Now, the states in yellow, you can only offer this to secondary homes and investment property. So that is the restriction we have. And of course, the states in gray here, light gray, is where we have no coverage or no availability, at least at this point in time of the equity share program. I hope we can extend that coverage very soon here by welcoming more partners. And as I said, we are always welcoming those partners by extending our product offering here. That's the big advantage of being a credit marketplace for you. Now, I'd like to remind you that we also carry a platform fee, and it's really a good time to introduce this because I did give you a brief introduction to all these product categories. Now, for products for homeowners, residential projects, we always carry a 10% platform fee, flat platform fee here, applicable to all products. So with the equity share program, it's no different. You always have to include the 10% platform fee on top of your pricing. So if you're offering a $50,000 project to your customer, then you create the application record within our platform for $55,000, adding that 10%, platform fee on top of your pricing. Of course, you can disclose that to the customer, or however you want to put that into your project. That is similar to what you could call it a dealer fee, but a lot lower than what we see in the marketplace today. We also have for this product a closing cost that does not need to be added onto your pricing. So that comes on the final paperwork. So if we're doing a $55,000, as I just said, $55,000 project, then there's going to be an additional 4% closing cost on top of that. So the starting amount for the customer, the starting amount that they're going to owe back to this capital partner is going to be the addition of all those different cost parameters there. And I believe that's it in terms of introduction to the equity share program. Let me give you a little bit of an introduction on the application process now, because this is different than what you're used to. In terms of getting the customer pre-approved, we can do that very fast. In fact, you have your access to your Eos platform account, and from there, you'll be able to create this application record, and we'll share that application record with our partners. And for this product specifically, we will need the customer to join an introduction call, and this can happen within the first hours of the application being created or in the next day or so. We want to create that introduction call opportunity to give a certified professional here, and he needs to be a certified professional. Either we call him an equity specialist or an investment officer. Now, this certified professional will explain to this customer and will help you sell this product to this financing option. They will explain how it works. This is a regulated type of financing option, highly regulated, falling more on the mortgage regulation space than anything else. So the certified professional will help make everything clear to the customer, answer any questions they may have. So you don't need to worry about explaining this all up front to the customer and trying to get through the greets and meetings, of this product, because someone will be there to do that work for you and help push the sale, make it happen for you. And once the customer clears that introduction call, we'll also ask questions through that call that will give the customer the pre-approval parameter that we want to get to. Now, after the customer clears that call and gets to that pre-approval, they will share documents, and the needed documents here, the required documents are the signed install agreement with you, copy of the current mortgage statement, proof of income, some sort of proof of income, no set parameter here for income level, just the proof of income, and a copy of their social security card, proof of homeowner's insurance, and the signed intent to move forward. That's what we call the signed disclosures here. It's just a signed intent to move forward, initial agreement, so that we lock that customer in at least to move them to the next stages. So all this can happen very fast within the first or second day here after the application is created. Now, the process that takes a little longer is the final steps here. After the customer has signed that intent to move forward, then we have to open a title check for them. So that can take between 7 to 10 business days, so up to 2 weeks, just to be able to go back to that title history, pull all that information to make sure that this customer does not have additional claims to the title of that property. We're looking for clean titles here. And this capital partner or these capital partners will take a second lien position on this. So they want to make sure that spot is available for them on that claim to title. Of course, they're not going to be able to force sale of this property because, there's always that original mortgage holder that controls or have that power. But this capital partner will always want to look at that to be able to have that clear spot as a way to secure this funding process, right? Like I said in the beginning, this is a secure type of financing. It offers that need to have that collateral available to be able to offer these financing parameters here for the customer. Now, after the title check is cleared, there's a property inspection. Sometimes that's done on site. Sometimes it's not needed to have an inspector on site, but we need to clear that, and all that the capital partner is looking for here is a good shape property, right? It's a property that's in good shape, a property that have all the safety items in place, like smoke detectors, have all the major aspects of the property in good shape too, like the roof and the walls and the living spaces and the floor. No rotten or just not in good shape items that are very important for that home to be appreciating in value over time. That's all they're looking for here, so that they can surf that wave of appreciation over time. So after we clear the property inspection, that can take between 3 to 5 business days, if you will, then we are through that 2 to 3 week process between title check and property inspection, and we can get to that final offer and closing. And that's when we can sign the final paperwork with the customer and finally get you funded for this deal. Of course, this is a different type of deal. Like I said, it's not an instant approval or fast funding deal, but it gives you so much more opportunity to offer to your customer base and segments that don't want to take up any more debt or cannot qualify for that debt. In fact, there are a lot of folks out there that are getting credit denials but still have good properties that can offer some equity as collateral, some small percentage, and go through this and be able to enjoy that. So that is the home equity investment in a nutshell. Here I am going to explain to you now the traditional solar loan and home improvement loan that we have here. Moving on to the second product category that we have. Loan amounts up to $50,000 on a 15-year term for solar projects up to 15 years, starting with a 6.9 APR. Now, this is a more traditional loan, something that you're used to. Of course, for this one, the customer will have that monthly payment. But, with the 6.9 APR, you can get really close to that savings threshold, depending on how much this customer is paying for energy, of course, and how much they're consuming. It will be the big determining factor, but you can offer something that's really affordable with a low platform fee of 10% on a 15-year term up to $50,000. Now, this will require the customer to have some disposable income available. They will have to show proof of income around $60,000. But what the capital partner is really looking for here is the disposable income available. And they will also do a soft credit inquiry initially to pull the credit file and understand if this customer is in good shape in terms of payment history. Now, this product has a really interesting hook to it because it does not require the customer to have any credit score in order to apply. So that's a big differentiator. I know you get stuck so much on trying to get customers to get approved, but then they have really low credit score, and of course they're going to get denied. Now, this will allow for you to move forward with the application process, but keep in mind that that credit score cannot be justified by the customer not making payments on time. So their payment history must be solid in order for them to be in good standing here for approval, and having this loan officer consider this. So this is the traditional loan in a nutshell. It's really available in Texas and Florida as the major states here, but also in Georgia, Nevada, North Carolina, South Carolina, Tennessee also. So, a wide range of states here, not very wide, but at least 8 states here available. The platform fees, again, 10% flat platform fee with the additional closing costs that does not need to be added onto your pricing, but that comes at the closing stages of around 5.49 in terms of closing costs here. This loan also requires your proposal to be at a certain price ceiling of, if you're in Florida, of around $3 per watt. If you're in Texas, of around $3.15 per watt. So those are the parameters that you have to work within. And of course, within that price, always keep in mind that you have to add that 10% platform fee as a way to use our platform. Now, in terms of documents required here, government issued ID for proof of income, salaried and hourly paid borrowers, 2 most recent pay stubs. Now, you have to cover an entire 2-month cycle for this one. So make sure you have those pay stubs. If the customer gets paid on a weekly basis, then you have to provide at least 8 pay stubs. If the customer gets paid on a monthly basis, then 2 pay stubs. But you have to cover an entire 2-month cycle. If they're paid hourly or monthly or weekly, just make sure you cover that entire 2-month cycle. And we need to see different periods, right? And continuous periods. So if you're presenting proof of income for July and August, it needs to be July and August. It cannot be July and February, right? So keep that in mind. It's always good to keep that in mind. For self-employed borrowers, up to 2 years of tax returns and income statements. And for yourself here, you will also need to share with us a complete solar quote. And from the customer side, the electricity bill will match the generation numbers with the consumption numbers to see if the project is really consistent. In terms of approval, this is a really faster approval process compared to the HEI. Now you create the application record within our platform, and between 24 to 48 hours, you can get a pre-approval without introduction calls, without any of that. So we'll just move in to do a soft credit inquiry and do the 24 to 48 hours pre-approval process. And from there, you can upload documents and get to that final offer and closing to be able to get the funds dispersed. Now, for this one, the funds will come directly from the bank to the contractor. So you will get that transfer of funds made directly from one place to the other. So let me check back here. I do see that there are a few folks adding questions, and I'll get to those hopefully in the later stages of our presentation. So I will get to those. I see some questions coming in. Feel free to ask questions throughout the presentation here, and I'll get to those towards the end, okay? Keep adding them there. I believe I gave you a really good introduction here to the traditional loan option. And this is really, a more traditional type of offer here. And I believe, as I said, a really good option to bring to your customers' table and consider as well if they're looking for a more traditional approach. Now, on the commercial front, like I said in the beginning, we work with multiple partners, and we want to get to that approval as fast as we can. So we have a faster approval process. We have also options that prioritize cost over anything else, and the terms up to 20 years, like I said. So the way we work with commercials now, if this is a segment that you're looking at very carefully, and I understand a lot of contractors are looking at this because it offers such a big opportunity, just because of the fact that there are so many incentives like the grants out there for customers, for commercial customers. We do offer three different options, at least right now, up to 20 million in terms of amount possible, up to 20 years in terms of terms, and rates varying between 6.5 to 9.5. Our fee structure here for commercial loans is a little different. We start with the 10% below $100,000 in terms of project value and amount, between $100,000 and $250,000 in terms of project size. Our fee drops to 5%, and then after that, within the 250 above, drops to 3%. Always keep that in mind as you build out your pricing for that proposal. In terms of process here, I should really remind you that at least right now, the commercial loan approach is through a more customized relationship that you build with your account manager. So from this initial relationship that you're going to build as you come in and onboard our platform, we will be able to share that, or you share that proposal with us for that commercial project. And then from our standpoint here, we'll share that with our partners to see which ones of them offer the right parameters for you. And if all of them offer the right parameters, then we'll go with all the three of them to see which one gets us a faster approval, a better term for your customer. And that's the ideal situation, right? But if you only can qualify this project for one or two different investors or capital partners, then we'll work with what we have. And by having multiple options, we'll have more chances to get this approved. We usually ask for initially the solar proposal with the details of that proposal. And from there, we'll be able to distribute that back to our partners and place the additional requirements and exchange them with you to discuss if it's the right time to ask that from the customer to move that application forward. So all this is going to be happening on the back end here of our relationship through email and calls. And of course, we're going to be able to jump on those calls with the customers alongside yourself to also help push for the sale and help you make the sale with the right, or better yet, the best financing condition available out there. So once you share that proposal with us, again, like I said, we'll share that back with our partners. We'll get the list of requirements and have the customer fill out and share the additional requirements with us to get them pre-approved. Just wanted to make sure you understood that we have, three different categories of partners here. The one that gets us to a faster approval, that will offer terms up to 10 years with rates between 8 to 9% APRs, and that will give us a faster approval route because it requires less of the documentation. It only requires initially a one-pager application, which your customer can easily fill out and get us that faster approval route if speed is something that you're really looking forward and really looking for. Now, we do have some other partners that offer a longer term approach for the terms here for the loan. So up to 20 years. Now, this route will ask for more questions pertinent to the project itself, because this partner will want to look at the project cash flow and consider that very carefully. And we do have a better cost structure one that will require more information. So it's really based on the requirements here and how much we can fulfill up front to get to that faster approval process. And all we want here is to work with as many options as we can to get you that faster approval route, but also respecting the parameters that you set yourself and you set the customer to, of course, prioritize the sale and help you close that deal. So this is the commercial loan approach that we have, and we'll go into much further detail as you come in and onboard our platform, and we do that customized training session for you. Now, with the fourth option here, the HELOC is the home equity line of credit. It's not very similar to the home equity investment option that we have, because this is, in fact, a loan. Comparing it to the first option I presented to you today, the home equity investment option, This is a loan. The home equity investment is technically not a loan. It's an options contract to convert that equity back in funds available for the customer and have that option to convert that percentage into equity later on. Now, the HELOC is a loan, so we require a FICO, a little higher FICO. Of course, this must be being applied for a homeowner that has at least a 15% equity availability on the home and cannot have more than 2 mortgages or liens on the property, and the debt to income ratio must be less than 50. So this has a little bit more of a requirement to get this customer approved, but there are a few upsides to it. I'll mention it in a second. Just to make sure you understand that also this customer must have a minimum file of 2 years of credit file age here, no delinquencies or on the current mortgage, no foreclosures in the past 5 years, no collections, no bankruptcies in the last 7 years, no undischarged bankruptcies. So these are the requirements for the HELOC. Now, this product is really built for solar projects, like I said in the beginning, because it offers those terms up to 30 years and loan amount between $50,000 to $400,000. So there's a lot of space to explore that in terms of loan amount. Now, interest rates range from 7.55 to 16% for the HELOC based on the FICO score of that customer. So there is a table where the interest rates is equivalent to the FICO score. And as, of course, this customer has a higher FICO score, they will get a lower interest rate for them, as low as 7.55 in this case. This has a really good coverage in terms of states availability. So in mostly all states here, with the exception of Delaware, New York, and a few others here. So the 10% platform fee applied, and a really good upside for this one too is the fact that we can get it instantaneously approved and funding in up to 5 days if everything is in place for this one. Now, the HELOC requires a different disbursement mechanism where the funds go directly to the customer. So you see here that the different financing categories and different products will have different disbursement mechanisms. And I will go into much further detail as you onboard our platform. I'll explain exactly how these disbursement processes work. But just to compare it with the HEI, for example, where we can make the disbursements for the contractor for you. In fact, we start with that 50% initial payment upon material delivery or bill of materials, 40% upon project completion, and 10% upon PTO. That would be the first option. The HELOC, the customer will get the entirety of the funds right away, and then it'll be more like a cash deal to you than anything else. So you receive the payment as you set into your agreement with the customer. So make sure you keep that in mind because there are a few nuances here and caveats to how the customer gets the funds, or you get the fund as a contractor, or how we disperse the funds to you as well. In terms of requirements here and processes, this is a little different still because we will give a direct route for the customer. You have an access to a link to a customized application for this customer where we can get that instantaneous pre-approval and soft credit inquiry process. If we get that instantaneous approval or pre-approval, then the customer moves to upload documents and get to that final offer and closing. There's also a hard credit inquiry process here done in the last stage, as it is with many of the loan types and offers here. It's very, very common for that to be in place. So this would be the home equity line of credit. Moving on here to our fifth category of financing options, the personal loan, is that last resort option, I like to say, because if the customer cannot get approved through anything else, they will consider a personal loan if that project is much needed, right? In fact, we have some cases of customers where the roof is leaking, for example. And so you have that customer too that they have urgency to close that sale, to close that deal with you, but they don't have any financing options in place. The personal loan is something that can be very customized to the customer. And it'll vary widely here in terms of interest rates and terms, can go from 1 year to 10 years. interest rates going from 3 to 35%. Of course, that's all based on the credit file or credit profile for that customer. But at least we'll give them that option to get approved and get this project moving for the customer and for you. So remember, we always have that drive to get an option on the table and get your customer approved. That's what we're here for. And giving more options, we believe we can drive down financing costs. Like I said in the beginning, we're really reinforcing here because that's our drive. That's what motivates us, and really that's what get us going here to build this partnership with you now. In terms of process, very similar to the HELOC, we do have a customized link that you'll be able to have and send to this customer, and they will fill out the application. And from there, get that instantaneous approval, upload documents, and get to that final offer and closing. Again, in this case, the customer will get those funds sent directly to them, and then we'll work back as a cash deal for you. So it's always important to keep that in mind. And as we get into more training, we'll make sure to have those observations in place so that you make sure you have that proposal and that contract and that agreement also marked with all those observations and different parameters here for the financing options you're offering. So with that, that's a really good introduction and vision into the EOS platform. If you're not registered yet, I highly encourage you to get registered now. You can go to our website, eosloan.com. That's eosloan.com. And right there, sign up, partner with us. You'll be able to take your next step and get into our platform. We'll do a vetting process. And right now, we are only welcoming contractors, fully licensed contractors. We want to work with the best and the highest quality partners possible to make sure that customer has that big value delivered to them. And of course, our capital partners get to receive and have the funds paid back to them, right? Because if the customer is not satisfied, if there's any problem with the project, that's probably going to impact the payback factor for the customer. It's going to impact how this customer is going to pay it off or pay it down. And if any issues arise, we want to work with the best and the highest quality. And you can be sure that on our end here, we'll have the highest quality of services to offer, and we'll fight for each one of your sales, of your deals that you put in here. Now, if you have the app, you can, work from your cell phone, you can work from your tablet, and really input those applications as you move from one customer to the next, or have your sales team utilizing that account. You'll be able to have multiple sales reps and sales organizations within your contractor account. You have that administrative access where you can control these different applications and make sure you have everyone under one umbrella here under your account. And you'll be able to see, of course, all the applications created, but these sales sales team members will only be able to access their own applications and manage their own portfolios of opportunities here. But I encourage you to look for that app right now. That it's under EOS Loan on the App Store and Google Play Store. Let me see if I can get to some questions here. I believe Cradle Solar was asking a question in terms of when will Texas be fully available for residential homeowners? We are, in fact, wondering the same thing now. Remember that those options come from our capital partners, and we are so excited to work with Texas on multiple fronts. In fact, we do have that traditional loan opportunity available in Texas, and the HEI also available in Texas for investment properties and secondary homes. We do have that HELOC fully available in Texas as well in the commercial loan opportunities. Now, we do have that one restriction in terms of the home equity investment option, only available for secondary and investment properties. Now, that is because of state regulations. And what our capital partners are trying to do is to consult with the state of Texas to understand, how those regulations are going to be applicable to this new type of financing. This is very new waters here for everyone. And these investors, of course, they have extensive opportunities in other states, and they have had some experiences in Texas. Like I said, Back in 2023, we were able to offer this in Texas for primary residences. But as the state of regulations changes too, we have to respect and rely on the best practices to meet those regulatory requirements coming from the capital partners and coming from the different states that we're in. So I can't give you an exact answer right now as to when this is going to be back available in Texas, but you can be sure that these partners and providers are working very hard to make that happen, given that the state of Texas is so huge and offers so many opportunities. So we're working very hard to get that offered up in Texas and back in place for you guys at Kratos Solar Power. Nice. All right. And, this is going to be here recorded and available for you guys. Let me check and see if there's any additional questions or comments here. I believe, I covered everything. I really appreciated your presence here. We had a few folks on our live stream. And if you're watching this on our recorded session, definitely welcome to come in, join our platform, access our website, start from there, or downloading our app like I have here, encouraging you now. And this is just the start of this marvelous opportunity to talk about all this online and live as you guys are right now. So it's really the first opportunity that I'm having to cover this ground here with you guys live through our social media accounts and YouTube channel. So you can be sure we'll bring in more presentations such as this, and we're starting really a series of live stream events here to keep helping push, your sales, helping boost your sales, and also, of course, drive our main purpose here, which is to make homeowners' lives better by making their choices more sustainable and affordable, and offering all these financing options for them right now is just the way that we found, the ideal way that we found through our credit marketplace and all these exciting financing options. And you can be sure that if you haven't found anything that's really interesting for you right now, in the near future, as you get onboarded and you keep up with our platform and you keep in our platform, we will introduce the ideal solution for you. We'll interact with you, we'll talk with you, and we'll go after those capital partners that can build those financing options based on your vision and your drive and your need to get to that customer that's ultimately the main decider to deploy a project, to purchase or invest in a solar system, or get their home improved, or even that commercial property that needs to be retrofitted, or have that project solar project in place to save those thousands, sometimes millions of dollars in energy costs, and have a sustainable way to do this. So with that, I think I wrap up this presentation, not to extend it any further, and really thank you and appreciated your presence here today. You can be sure that you're going to be seeing a lot more of me. I know I keep bothering you a little bit on the emails, and that's how we get our message across. So if you take an interest, come join us, and we'll be here with an entire team of very capable professionals to, again, accomplish that really necessary purpose of offering more financing options into the marketplace. Okay, with that, then I say goodbye here and keep you posted. See you soon.